What if I told you that inflation could slowly drain the value of your savings? With rising costs, it can feel like your money is losing value. But there are ways to invest that can actually beat inflation and help you preserve and grow your wealth. Stick with me in this video, where I'll share the top 5 long-term investments that beat inflation so your money keeps working for you. These strategies are not get-rich-quick schemes, but smart, sustainable ways to build wealth over time, even on a budget. So let's dive in. 1. Bonds. Inflation-proof your investments. If you're looking for an investment that is designed specifically to beat inflation, bonds should be at the top of your list. Issued by the U.S. Treasury, these savings bonds offer unique structure with a fixed rate and an inflation adjustment that changes every 6 months. For example, from November 2025 through April 2026, bonds offer a total composite yield of 4.03%. combining a fixed rate of 0.9% and an inflation adjustment of 3.12%. This inflation-based component means that as inflation rises, your returns increase as well, keeping your purchasing power intact. It's an ideal option for those seeking a low-risk, stable way to protect their savings from inflation. However, it's important to note that bonds are not without their downsides. For instance, there are limits on how much you can invest each year, and you'll need to hold them for at least 1 year before cashing out. But the peace of mind knowing your money is growing with inflation can be worth the trade-off. Bonds are a fantastic choice for conservative investors who want their money to grow safely without being exposed to the fluctuations of the stock market. Over time, even small contributions can compound, and this steady growth can help you accumulate wealth without taking on excessive risk. 2. Real estate investment trusts. REITs capitalizing on property's value. Real estate has long been a solid hedge against inflation, as property values and rents tend to increase in response to rising prices. As a result, investing in real estate has historically offered protection from inflation. However, not everyone has the financial resources or interest to directly purchase and manage properties. This is where real estate investment trusts REITs become a valuable solution. REITs allow you to invest in real estate without the need to buy property outright or deal with the management hassles. Instead, you can purchase shares of REITs through the stock market, which gives you exposure to a portfolio of income-generating properties, including commercial spaces like shopping centers, office buildings, and residential apartments. By investing in REITs, you're essentially owning a fraction of these high-value properties, benefiting from both rental income and potential long-term property appreciation. The beauty of REITs lies in their structure. They are required to distribute at least 90% of their taxable income to shareholders in the form of dividends, providing a consistent stream of income. Additionally, REITs tend to benefit from property value increases over time, which are often aligned with inflation rates. This makes them an excellent tool for maintaining purchasing power in an inflationary economy. For example, the Vanguard Real Estate ETF gives investors access to a diversified portfolio of real estate investments, making it an easy and cost-effective way to tap into this asset class. While REIT stock prices can experience fluctuations, particularly when interest rates rise, the core business of real estate remains resilient. Collecting rent and managing properties are essential activities that continue regardless of broader market conditions. Over the long term, REITs offer an attractive opportunity for diversification while providing inflation protection and the potential for growth. Investing in REITs not only helps you keep pace with inflation, but it also provides the opportunity to significantly build wealth over time as real estate values increase. 3. Commodities, a direct hedge against inflation. When inflation hits, commodities like oil, gold, and agricultural products typically see price increases. This is because commodities are directly tied to the physical goods that rise in value when inflation occurs. Investing in commodities can help protect your wealth because they act as a natural hedge against inflation. For example, commodities like precious metals, gold, silver, or energy resources, oil, natural gas, often increase in value during inflationary periods as their demand stays strong and their prices rise accordingly. Investing in commodity stocks, like those of energy companies or miners, is a great way to gain exposure to these assets. You can also buy commodity-focused exchange-traded funds, ETFs, like the SPDR S&P Metals and Mining ETF, which tracks a basket of commodity stocks. In 2022, for example, The XME ETF gained 13%, while the S&P 500 experienced a negative return of 18%. This demonstrates the ability of commodities to outperform the overall stock market during inflationary times. Adding commodities to your portfolio can be a smart way to shield yourself from the effects of rising prices and build wealth as these assets appreciate in value. While commodities can be volatile, they offer a solid long-term strategy for protecting and growing your wealth. Diversifying your investments to include commodities can act as a stabilizer, especially during inflationary periods. 4. Stocks with pricing power. Companies that pass costs along. Certain companies have a built-in advantage during periods of inflation due to their pricing power. Pricing power refers to a company's ability to raise the prices of its products or services without a significant decrease in demand. This characteristic makes such companies resilient during inflationary times, as consumers continue to buy essential goods and services even as prices rise. These types of stocks often outperform the broader market when inflation is high because they can adjust their prices in line with increasing costs, helping to protect their profit margins. Companies like Advanced Auto Parts, AAP, are prime examples. People rely on their products like auto parts to maintain their vehicles, regardless of the economic climate. As the cost of new cars continues to climb, many consumers are holding on to their current vehicles for longer periods. This trend boosts the demand for auto parts, giving companies like AAP the ability to raise their prices without significantly affecting sales. The ability to pass along rising costs to consumers is critical during times of inflation. These companies can increase their revenues by charging higher prices for the same products, which allows them to keep up with inflation and maintain profitability. In many cases, these businesses continue to grow despite the rising prices because consumers view their products as essential. When investing in companies with pricing power, focus on those that provide essential goods and services, have a strong market position, and can easily pass price increases on to consumers. Think of companies in industries like healthcare, utilities, and consumer staples, areas where demand remains steady even in challenging economic conditions. These types of stocks not only help you stay ahead of inflation, but they also offer consistent growth in both value and earnings over time, making them a smart addition to any portfolio during inflationary periods. 5. Gold, a timeless hedge against inflation. Gold has long been considered one of the most reliable investments during periods of inflation. According to historical data, gold has outperformed inflation by an average of 3% a year over the last 40 years, meaning its value tends to rise faster than the cost of living over the long term. This makes gold a strong contender when it comes to protecting your purchasing power in inflationary environments. Throughout periods of high inflation, especially from 1974 to 2008, the price of gold consistently rose in real terms, sometimes outperforming other traditional assets like bonds and stocks. The scarcity and global demand for gold, along with its independence from any one country's economy or currency, make it a valuable hedge during economic uncertainty. While gold doesn't produce income like stocks or bonds, its long-term value has proven to be resilient. Gold is not tied to any specific country's fiscal policy, making it an effective store of value when inflation increases or the economy falters. You can invest in gold in a variety of ways, including buying physical gold like coins or bars, investing in gold ETFs, exchange-traded funds, or purchasing shares in gold mining companies. Each of these options gives you exposure to gold's potential for wealth preservation over time. In addition, gold's value often rises when inflation pushes other asset classes down. While its price can fluctuate in the short term, over long periods of time, gold has shown its ability to preserve wealth when other assets might suffer from inflationary pressures. And there you have it, the top 5 long-term investments that can help you beat inflation. These strategies, from my bonds and REITs to gold and inflation-resistant stocks, provide you with options to safeguard your wealth and make sure your money grows, no matter what the market throws at you. If this video helped you understand how to beat inflation with smart investments, don't forget to like, share, and subscribe for more financial insights. Thanks for watching, and I'll see you in the next video.